You can help me to record this as.
All right, I'm recording. So,
okay.
When you open your chart, it doesn't matter the chart it is, whether forex, whether crypto, whether currency, synthetic, indices, anyone. These are the major three things you want to look out for. What's the trend? The trend tells you the history. Okay, what price has been doing over time.
Yeah.
So let me just take you through. Let me open another chart. I don't want that chart to go. So first, the trend of the market or the structure. The trend is the same as structure. And you know that if price is buying or bullish, price will give you something like this. You see this formation going up.
Yes, high, low.
Yes, and then once price wants to start selling, you see price giving you all this formation. And on to these things are on my YouTube page, so you can just go there.
Yes, I've seen it.
So it's just, this is the structure. That's the first you must know. Once you know the trend, then from there, you can now begin to go to the next question. What's the higher time frame point of interest? Now, what is the point of interest? If price is going up like this, you want to only be buying when price comes back to this zone. That's the time you want to buy.
Yeah.
So price pushes up. You don't want to join here. Allow price to come lower. As price come lower, you buy from here.
Yeah.
Then price takes out this high. Once price takes out this high, wait back here. Price will come back. Price may dance for many days. You still come back here. You buy from here. Price take out this high. Wait for price here again. Price will still buy from here. So price can come back here and price will just still buy up. Are you getting it now? So long you are following the trend, the structure, that's when price is buying. Now, if price is selling, you want to, let me use another sample here so that I make the chart clean. So when price is now bearish, price creates this low, creates this high. It is when this leg is created that price is bearish. Yeah. So once this zone has been taken out, the previous low, then you want to wait for price at this zone to sell. If price is bearish, you want to only be selling. So price returns back, you sell from here, you go lower. Once this zone has been taken out, this previous low, you want to wait for price to return back. Most of the times you want to buy from here. Once you want to buy from here, price can go like this and take you out, then come back to this place. Yeah. So you want to just wait for only the sell opportunities. Price comes here, you sell. If price is bearish, look for only selling opportunities. And if price is bullish, look for only buying opportunities. I know I'm putting only.
Yes.
So that
I know that.
don't want to get caught at the middle of the trade. So once price takes out this high, allow price to return, you buy. Price trade higher, takes out this previous high, allow price to return, you buy. Price takes out this high, allow price to return. Once this high is taken, price return here, you buy. Now this point where price is returning is your number 2. This point becomes your point of interest, higher time frame, POI, right? That's now your point of interest. So it becomes your point of interest. So once price comes back, this becomes point of interest. Okay.
Yes, sir.
This becomes point of interest. So if price is bearish, the point of interest will be where you want to sell. Price is bearish, point of interest is the previous high where you are waiting for price.
Yeah.
Okay. That's where you want to allow price to come back to.
Yeah.
Okay. All right, just just give me 1 minute. Let me do something.
No problem, sir.
All right. So that is the place we now refer to as your point of interest. That's where you want to wait for price to always come, like always. So when price comes back there, they want to get your entry at the higher time frame point of interest.
Okay. But can it also do the same thing on a lower time frame?
It will do the same thing, whether higher time frame or lower time frame. So entry model now. Okay. Entry model is when price is coming here. This is where you want to enter from. But it will do this same model because as it's returning, it won't return with this straight line. It will return with this on the lower time frame.
Yeah.
To return with a bearish move, right, on the lower time frame. So if price come here,
yeah,
price will do something like this. You see, price was bearish, now price is bullish because price has broken this point.
Yeah.
So this one I refer to a break of structure. So this becomes your entry model. All right. Allow price to give you this kind of model. Once it gives you this kind of model, then you can now enter from this zone. Allow price to return back.
Yes. For a test.
Yes. So it's still the same thing. Price gave you a high, a low. Now price gave you a low, lower, low, higher, low, lower, low. Price broke. So since price has broken, this is now a bullish formation. So in that bullish formation, that's what you now want to allow price to come and retest. Then you now enter from here. So this is your entry model. Entry model.
Yeah.
Entry model. Entry model is there, spotted. So I talked of number one, your overall structure of the market, trend, bullish or bearish. Next one is your higher time frame point of interest, which is the previous point where price left from, and then entry model is spotted there. Okay.
Yeah.
All right, so sorry, let me attend to something. So this is just what we have, okay? This is what we have.
Okay.
Now,
okay.
Let's go to the chart. I'm not going to touch this pattern. Let's go to the chart. Let's see. It's 25. let's just do one or two assets. Let's see if we can get it here or not. It's the auto-uploaded system. Let me send this to you on WhatsApp so that you can.
Network, right?
Yeah, well, I'll send that to you on WhatsApp. Let's see.
Okay.
I really want to keep this page if I would have used. Okay, let me just push it higher. Let's see. Let's use this. Why the other one is waiting to go? All right.
Okay.
So watch this. Let me start from this zone. Okay, watch. The same thing we explained. Price created this low, price went up. What would you have done? Allow price to come back here. That's where you buy from.
Okay.
Price took out this high. Delay price took this high. Price actually came here and bought and now took out the high. When price took out the high, what do you do? Wait for price here. That's not what we just explained.
Yes.
You saw price came back to it. Price took out the high. Price took this high. Then be marking the highs for you. Took out this high.
Yeah.
So what do? You waited here. Price didn't come back, but already I've gotten 2 entries. You can't tell price when to come back. Price didn't come back. All right, let's go. Price came here, created another low, and took the high. As it took this high, wait for price to return. Price came back to the low. Price came back. Right? Price came back, took the high. The price took this high, waited for price to return. And you see there was a fair value, there was a gap here, fair value gap here. Price returned back to the gap. Price returned to the gap and took the high.
Okay.
The high was taken. What I expected. Price returned back to all this side. Price didn't come instantly, or price ran away. Our pricing. Price ran away. But when price ran away, this place was still left. You see how this is daily. You saw that price came back to it after how many days? Only God knows how many days it is. Price came back to it.
That's more than a month.
So you're still waiting for it. Price left there. Price left there May, around May this year, and came back to it around July. That's what
the following year.
Well, price actually came.
Okay.
Price took this high. Now that price took this high, what are we expecting? Price took the high. Now we're expecting that price should go to return. I can see this gap here. Yeah, went out where? It should be around now. It should be around. So that's what we're waiting for.
To come.
Yes, we're waiting for price to come back here. So you see, it has taken many days. Price has been here, and you can see a lot of information are here. That there's a gap here. There's also a gap here. Okay. Price need to fill this gap, and then when price comes to this gap, what are you going to look for? Your model. Allow price to come to the gap. This is daily. If price now come to this gap, allow 1 hour to deal with that model formation. Is that okay? Then you get entry. Now look at it. Let's come here.
Yes.
When price comes, let's see whether I can see 1 hour in this zone. Let's see. Stop running up and down. That is disturbing me, please. Let's see whether I'll get a 1 hour around this zone. Okay. When price came here, that first time, that's the first place. So I'm going to zoom it out. Let's say that we got a 1 hour model formation, a break and a retest at this zone. See, price came here, rallied up, and price came into the zone proper. When price was coming to the zone, you can see how the price came like this in a bearish formation. It's coming to the zone. It's coming to your zone.
And it's still making
it's coming to your zone.
Higher and higher low.
Look at it. Coming to your zone. You see that model?
One leg there, yes.
That's it. So that's what we now call a PMS. See, price came here. So let me remove this down. Or let me make it a thicker. I make it a red color. Okay. So I see it. So price was coming, price created this push up, came down, broke above. Is it clear?
Yes, it's clear.
And that's the model we talked about. So look at it. Price created it here.
You can see it.
You can see it now. It's the same thing. So when price came, gave you that break of structure there, what do you wait for? Allow price to come back to retest. That was your entry. Price retested, and price took the high. Price took this high. You start adding position. Price took this high. Once price takes the high, wait for price to return here.
Return back again.
You see, price came back, right? Came back.
Yes.
So let's be following it one by one. Price ran away. Took this high. So I'm expecting price to return back to this gap. Whether price came back, I don't know. But already I've gotten entry 1, entry 2. Let me zoom and check whether price came. Maybe price came, maybe price didn't come. You see, price came back.
Wow.
You see that price came back?
Yes.
The price came back. Look at what price also did to tell me that I truly want to buy. Look at it, high, low, a high, a low, a high, a low. What did you see? Price broke. Price closed above. So when price closed above, you want to stay here and allow price to what? Retest.
Return.
Price broke, retested. Now wait here. There was a Q here, entry at this zone. Push to this high. Price created another IP here. Whether price came, I don't know. But this way I'm aiming for. So if you are buying here.
So what is IP, sir?
IP is that gap, like this gap we saw here. That's IP.
So look up.
It means insufficient price action. That's why they say gap.
Oh, okay, okay.
The price closed and price didn't weak. There was a candle here without wick. Look at this candle, wicks everywhere.
Yes.
Yes, left and right wicks. Well, this one happened, so price will come back to fill it.
Yeah.
Like you leave your house, you want to drive out, and suddenly you remember you didn't lock your door. What will you do?
Yeah.
You park your car, go back
Okay,
and
again.
so that's ideally we come back to that place to lock it. Then if I was to take profit from here, from this my high, this is a 1 to maybe 3.6. Yeah. Price kept running away since that time. But the price come there, yes sir. Price came back to the IPA and price has been there. So it's just the same thing. If price come to that daily point of interest, want to wait for 1 hour to be in that break of structure and then allow price to and allow price to
maybe when you see it on a when we see it on a daily, then we'll go to 1 hour to
allow 1 hour to break. Once 1 hour break, enter.
Yeah.
So that's just all you need. Oh Jesus, this is not easy. I don't like this kind of stuff.
Well, sir. Thank you very much.
My write-up is done. So, but that you've seen how we handled everything. So allow price to come. Price came.
Yes.
Now we are all waiting that price should come to this gap. Are you not seeing that gap there? That's your one price to come to.
Yes, I can see it.
Yes. See, that candle has no gap. Why do we want price to come there? Because price has taken this high already. We are still bullish. Price has taken that high.
Okay, yes.
So if price come back here, just allow 1 hour to give you the reconstruction. Something like this. Same thing. So let's go to 1 hour. Let's check here whether we have any reconstruction in 1 hour. It's not one. Price has not even come to the higher time frame point of interest yet. So let's see 1 hour structure. What do you see on 1 hour structure? Price has been coming like this. Price gave all of this low, all of this low, all of this low. Price broke here. Price broke here actually, but price came back. Price only respected first. Is the break of structure price respected, but price has not come to the point. So I'm really not interested, right? Allow price to come to the point first. Price gave you this small break of structure here, came to it, rallied up. See, price gave you small break of structure here, came back to it, rallied up. Then now price is going to clear because it is a fake one. Price is not at your zone, your higher time point of interest. So allow price to come there. Okay, just let price return. But rather, if I wanted to sell this, I would have been interested in this. If I'm not, I send this to the group. I send this to the group.
Okay.
If you, the Telegram group, I actually send this to the group. I think.
Okay, you mean the normal Telegram group?
Yes, I sent it to this sale that is happening. I sent it to the group.
Oh, okay.
Yes, not even the mentorship. I sent it to the general group that will sell from here. Why? See how price was buying, price bought, came down, came down. What do you call this? That's a biblical structure here.
Okay.
So price sold, broke structure down. So when I saw this, I knew that we were going to sell. I'm sure, let me check. Can I see that? I did.
Okay.
Let me see. Just 1 minute, let me see if I can still find it.
Yeah. Okay.
It was the last listing I dropped. Okay, that was it. This was it. Yeah. That was it. First entry was here. You saw that same thing you saw on H1. That's it. That was the break of structure here. Our price came back to the side P. Then this was the second one that price is reacting to right now.
Okay.
So it's just the first one. Then price gave redistribution here. I'm going to be taking that low, all that low, all this will be taken out, all of it.
Okay.
Why? Because we want to go to our daily point of interest.
Point of interest.
So allow price to come here, 1 hour, price will give you this information. So let's check one other asset before I end the call. Then I'll send you the video so that you can go through it over and over again.
Thank you very much.
What asset now?
Okay, you should check 51S or.
Is that? Okay, so remember our pattern. So let's leave all of this line first. Let's talk about what we have here. You can see that we're bullish. Is that not true? We're bullish.
Yes.
It's very clear. Price created this high, came, created this low, price started being bullish here. Price started being bullish from there. So when price moved this high, you can see price came back. That's so bought from here. Price took all of this high. Waited for price to come back to this gap. There's a gap here. There's a gap,
there.
Yes. There's a fair value gap. The price didn't reach there. But price came to below 50%. But if you take your Fibonacci from this low to this high, look at where price started buying up. It's below 50%. So that's a discount. And price came and bought here. So this buy here was a legit buy. If you go to 1 hour, you see how clean this buy was. Go to 1 hour and see it. Now, price took this high. Look at where price took the high. So after taking the high, price still did what? Came back to this Q,
back to retest.
Smart money Q for a retest. And price took the high. Wow, it's okay. Price took this high. When price took the high, you see that gap? Fair value gap. Price came back there. Price came back to the fair value gap. Price blasted and left a gap here too. After taking all this high, price left a gap here. When price came back to that high, you see that price still bought before price now sold. Because when price got to this zone, look at it, price broke structure. Changing the trend now to a bearish trend. Is that correct? Yes. Price started selling from there. So when price started selling after price broke structure, where do you want to sell? Only at this gap that is here. There's a gap here. Let me zoom it out.
Wow.
Look at this, a tiny gap there.
Okay. That's to say that that gap is always, there's always a gap.
Yes, price leaves those, it's called a footprint. Price leaves it so that you will know what they are doing. And I've explained to you now, they have to come and lock, close it. So price came back there.
It's true.
Then they sold down massively, like massively. After breaking, where did price come back to? Price came back to, there were two gaps here. One gap, second gap. Price came to the second gap and left. Didn't come to this other gap. But even here, you still see 1 hour break of structure here. So price started selling. When price sold down, the next place you can think of now is price came here. There's a gap here. There are so many gaps here. So price might come back to this zone and sell. But we're still bearish. We're still bearish. For more. Price came back to this gap. Wow. This tiny gap here. Yeah, that other gap that we marked, that price didn't come to that time and price reacted it. That's the price came back to.
Okay, yeah, there's it.
So we marked that gap that time. If I took Fibonacci, so price came back, filled that gap beautifully, and price started buying. So now, if we come to this zone, you see 1 hour break of structure. Let's check. You'll see 1 hour break of structure. Let's check. But we're actually bullish. Sorry, we're bearish here. So let's see whether we got a 1 hour break of structure here to join the trend. Okay, yeah, price did. Price started selling massively, high, low, high, low, high, low, and price moves above here. Now the 1 hour break of structure, price goes above that place. So there's a gap here. Though it's not 1 hour, I think the gap is on a much lower time frame, but there's a gap here. That's why you did not wait for price. And that's where price came back to. To fill the gap, and price traded away. So when price came back to this gap, let's check 15 minutes. You see what price did at that gap on 15 minutes. On 15 minutes. If price come back to my 1 hour on 15 minutes, come back to my 1 hour point of interest, I'll just go to 15 minutes. That's all I want.
Okay.
Look at it, the gap on 15 minutes now. Let's see, you see that entry, very sweet, like very sweet. Look at it. High, low, high, low, high. And what happened? Price broke this place. Yes. So when price broke that place, remember this is the whole return. Where did price come back to? This place. You see there was a gap there.
Okay.
You see that gap? So
one will have to train his eye to see these things.
Yes, you have to. That's why I like zooming out. If you zoom out, you see it. So your entry there, stop loss at this low, and then you start aiming. Your first profit will be this high here. This high that first gave us the break in market structure. So if you take this trade from here all the way to this zone, that's a 1 to 8.
Wow.
If you reach $1, you make $8. You reach 10, you make 80. You reach 100, you make 800. You got a 1 to 8 there. Simple, fast. By simply align price.
Yes, it's simple.
It's actually simple. It's you that is trying to. You are thinking it's hard. It's not hard. It's simple. It's even tiring. You are doing the same thing over and over again. Then let's take.
Yes, I just look at it that.
Go ahead.
The other height, yeah.
Yes, let's take profit to that high.
Wow.
That's a 1 to 15. So if somebody tells you he caught a 1 to 15, you'll be like, wow, you're a professional. Yes, he's a professional. He has trained. Yes.
Wow, this is great.
So ask your question. I think I have 3 minutes on this call.
Okay.
I actually have some things on my table to play.
Yeah. Actually, I okay. I actually see that this thing is a repetition of the same thing happening over and over and over.
I'm telling you.
Not so. Yes. It is just one just have to open his eye to learn and to see, to
patiently wait for it to come to your zone. That's another thing.
Yeah.
You don't say, he's buying, he's buying. He's not buying. He's not going without you. I like to come to your zone. If it comes to your zone, you get a good entry. If you enter at the middle, you might be hit. You might be hit.
Okay. That's true. Wow, how to go and watch this in over and over with other videos of yours that I've been watching. Sir, I'm sorry. The 1 hour, the daily time frame that daily time frame entry that you talked about in those videos, it also applies the same thing here, right?
Yeah, it's the same thing. That's the daily candle for entry.
Yes.
The same thing. The things are written about. Well, there's no time to do that, but let me see.
Okay.
Same thing, same thing. First, find out how did the previous candle close. Yeah, bring one for me. How did the previous candle close?
Yeah.
Well, thank you for this. Yeah. Wow. No, I'm trying to load this thing. It's not loading. I don't know. And the time is running.
Okay, let me not waste your time. I don't know. Like I told you that day, I want to join your mentorship. But the truth about it is that right now, I'm not financially strong.
Yeah, you said so. No problem. Just take your time.
Yes. So.
All right, look at this. Look at this daily candle. Wait, just look at this daily candle. This candle, is it bullish or bearish? This one.
This one is bearish now.
It's bearish. So since this candle closed bearish, what it means that the next day will definitely be bearish. So look at the next day. What you just do is put your line on the open. This is the open of the candle. Where the candle closed, that's where the down open. So this is where it open. Any other 5 minutes break of structure on this, the new day, take entry. So let's go to 5 minutes.
Okay.
Okay, this 5 minutes. Any 5 minute break of structure. So see, look at how you break open. Candle open pushed higher, and the candle with this break of structure broke to this low. So entry should be on this IPA. There's a small gap there. That's where price came back to.
Network.
So if you had entered,
I cannot hear you. Okay.
And you get the record. You entered here. This is already a 1 to 3.
Okay.
Price open, push higher, and broke lower. That's the break. So price